Stock prices of the Chinese big four electric car companies have tanked right after Tesla's earnings report, which some say was disappointing and was below estimates that experts predicted. Now, I'm not sure whether or not I agree with that comment, but that's what people are saying. They're saying the reason for these big four, BYD, NIO, XPeng, and Li Auto, seeing their share prices come down by such a large number in such a short period of time is because of Tesla's report. Hello, my friends. Welcome to the channel. It's great to see you. Thank you for tuning in. I'm Sam Evans. You're watching the Electric Viking. Welcome to all the new subscribers. Great to have you. Welcome back, everyone else. Just want to say a big thank you to our Patreon supporters. Really appreciate what you do and really couldn't do this without you. So when I say that these stock prices have tanked after Tesla's earnings disappointed, well, the tanking is worse than what it looks like because aside from BYD, the others have actually already come down enormously over the past 18 months. Their stock prices are way below every single estimate. I'm talking, if you actually went to tip ranks and you look at the worst estimates for XPeng and NIO stock, as in the most pessimistic price predictions from a year ago, none of them were as bad as what actually ended up happening. And now we're seeing new lows. Shares of Chinese EV makers have been battered on Thursday after Tesla reported slightly disappointing third quarter results when the company missed estimates. Now, I personally don't think they were anything out of what we should have expected. In fact, I think they're doing pretty well considering they've drastically lowered their prices below even other manufacturers' numbers, and they're making a profit. To me, that's incredible that they're making a profit when they're selling at the prices they're selling at. If you think about it, I mean, no one else is making a profit on EVs. Maybe Mercedes on some of their high-priced EQEs and EQSs. But other than that, I mean, on the average sales price in this segment, you're talking between $35,000 to $70,000 US dollars EVs. There's no one making a profit. Only Tesla is. So the fact they made any profit at all, in my opinion, is actually a win. But anyway, experts don't seem to agree with that. This was the first time Tesla missed on both earnings and revenue since their second quarter of 2019. And this is possibly part of the kind of unrealistic expectations I think we're placing on Tesla recently. We're just expecting, basically miracles every single quarter. And this was never going to be sustainable over the long term. On Thursday morning, Hong Kong listed shares of Chinese EV makers BYD and XPeng fell 2.2% and 9% respectively. And XPeng is the company that is now building EVs with the Volkswagen Group. Volkswagen Group had invested in them, basically saved them from likely bankruptcy. And also, the Volkswagen Group are using their old EV platform to build EVs in China, which is kind of a shock to me, but that's what they're doing. But XPeng stock just continues to fall. What about Li Auto? Li Auto fell 3.5%, which is surprising considering the fact they just revealed their brand new EV yesterday, and it's quite a nice looking car. Also, NIO fell by 8.3%, or 8.4% in fact, and Geely fell by 4%. There's some pretty big falls there. During Tesla's earnings call Wednesday, Musk cautioned that Tesla, with the Cybertruck, is facing some challenges to actually make it profitable. He's saying that won't be profitable probably next year, probably won't happen until around 2025. I think that's to be expected. I don't think that's out of the ordinary, but people have reacted to that. Anyway, he said Tesla won't see significant positive cash flow for 12 to 18 months after production begins. I think that probably means Tesla won't see any positive cash flow at all, as in any profits at all on the Cybertruck for about a year and a half until they've ramped up production and solved some of the challenges that they face in terms of making Cybertruck quickly. To make a profit on cars, you've got to make them quicker. It's one of the things that Volkswagen Group said. One of the bigger disadvantages that they have, they said, versus Tesla, is that it was taking them about 33 hours to build an EV, and it was taking Tesla 10. So if it takes Tesla, say, 40 hours to build the Cybertruck, it's too expensive. Musk said the company is working to bring down the prices of its cars amid high interest rates, but it is as challenging as Game of Thrones, but pennies. Now remember, Elon Musk loves this kind of stuff. He loves this strategizing kind of thing, this Game of Thrones, this kind of video games that he plays. I do think Tesla will succeed with the Cybertruck. Some people are predicting they're going to fail abysmally and the Cybertruck will just be, a car of the past. It'll be a complete failure. I strongly disagree with that. I think you're really underestimating Tesla. They are the biggest automotive success story of the last 100 years, if you think about it. I mean, who else has made a profit on EVs other than BYD? So they've done really well, and I do think they will succeed, but it's going to take some time. I'm worried, he said, about the high interest rate environment we're in, adding that it will be much harder for consumers to purchase cars if interest rates were to increase further. Tesla shares closed down 5% on Wednesday. Other US-based EV rivals, Lucid and Rivian, fell more than 9% on the same day. Lucid's stock fell a day earlier after it recorded third quarter EV deliveries, and after Bloomberg reported that Lucid was losing around $350,000 US on every car it sells, meaning bankruptcy could come sooner rather than later. In the first 6 months of the year, BYD was the world's top EV manufacturer, contributing 21% of global sales of EVs, according to research from Cancellations, but that includes plug-in hybrids. If you include plug-in hybrids, then that is correct. But if you don't, then Tesla and BYD are in a close race, and Tesla is just ahead. However, Tesla still owns 15% of the global EV market share, whilst Volkswagen as a group, not just the brand, but the entire group, has around 7%. EV players are under pressure, says CNBC, from a price war to gain market share amid massive competition. And one of the key points is here that many experts have been saying there will be a raft of bankruptcies, actually not happening in the US, but happening in China. There's just too many EV manufacturers. It shouldn't be 70. Even Chinese government thinks there's too many. It's saying that many of them need to join together because they're just stupid, thinking they can compete with companies like BYD. And I believe the government is right. It's how do you compete with BYD? It's insane. Tesla conducted multiple rounds of price cuts over the last few months, making its cars cheaper than they've ever been. In particular, if you include inflation. If you look at the increase in, or the decrease in the value of money because of inflation over the past couple of years, then Tesla vehicles, all of them have never ever been cheaper than they have now. Tesla have, of course, also reduced prices in China, where they have historically made high profits. The world's biggest EV market is kind of presenting somewhat of a challenge right now. Rivals like BYD, NIO, Li Auto, XPeng, Aeon, Nita, and many others are joining Tesla in competing for customers. And the other thing that's happening is they're taking away sales from companies like Toyota, Honda, and Nissan, and Mitsubishi. But hang on a minute, Mitsubishi don't exist in China anymore. They just took off and left. More automakers will go bankrupt over the next 12 months. The question isn't if it'll happen. The question is who and when. Is Tesla one of them? Of course not. But the automotive market landscape will change drastically. And it's going to be really interesting to see what happens and to see who's left standing. Let me know what you think on this in the comments. Bye-bye.